This is the Southside School of Financial Freedom Watchlist and Market Report for the week ending July 23rd, 2022. Our question this week is, what is price earnings ratio? The answer will be provided later in the video. This week, the market ended higher. The Dow Jones Industrial Average decreased minus 0.43% on Friday, but was up 1.95% for the week. The S&P 500 decreased minus 0.93% on Friday, but was up 2.55% for the week. The Nasdaq decreased minus 1.87% on Friday, but was up 3.33% for the week. Looking at the week, we can see that there were 6 down finishes versus 9 up finishes for the major indexes. On Monday, all the major indexes ended down. On Tuesday, Wednesday, and Thursday, they all finished up, and on Friday, they all finished down again. The new unemployment claims were 251,000 versus 240,000 expected. Home builder sentiment dropped 12 points in July. Home sales fell 5.4%. Mortgage demand dropped to a 22-year low. China holdings of U.S. debt fell below $1 trillion, and the 10-year U.S. Treasury yield slid to a 2-week low. New unemployment claims, falling home builder sentiment, home sales falling, mortgage demand declining, Chinese holdings of U.S. debt dropping, and the 10-year U.S. Treasury yield sliding to a 2-week low are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down is virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day or even every week, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will go up because the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and Congress. These 5 entities will do what they must to drive the market higher. Now we are at our question of the week. What is price earnings ratio? The price earnings ratio, or PE ratio, is the ratio of a company's share price to the company's earnings per share. It is the relationship between the company's share price and the earnings per share. The PE formula is PE ratio equals current stock price divided by earnings per share. The PE ratio is also known as the price multiple because if you multiply earnings by the PE ratio, you calculate the price. Thus, a company that earns $5 per share and has a PE ratio of 15 has then a price per share of $75. The price is 15 times higher than the earnings per share. Investors use PE ratios of companies to value and compare companies to each other, especially when the companies are in different industries. High PE ratios mean that a stock may be overvalued or it is expected to grow. That is, it is a growth stock. Low PE ratios could mean that a company is undervalued or that it is not expected to grow very much. That is, it is a mature company. Companies that do not have any earnings do not have PE ratios because there is nothing to put in the denominator of the PE ratio formula. What are the PE ratios of your stocks? Are they high or low? Do you expect your stocks to grow, or are they mature? Or do you own any stocks at all? If not, why not? Is it because you do not understand anything about the stock market? Well, it was not taught to you in school. However, if you ever want to learn how to get wealth and income through the the stock market, you are going to have to teach yourself. You must RSI, that is, read, save, and invest. Formal school taught you how to read, but society and the powers that be discourages you from reading, especially books. School taught you to be a worker. They did not teach you how to be an investor. And they taught you absolutely nothing about the US financial system. However, you can learn how to be an investor if you simply start reading books about investing. Books that you can borrow from the library for free or buy cheaply online. It is not difficult to learn how to be a passive investor, which is what most people should do. Check out this list of recommended books on the books page of the Southside website. These books and others like them will not teach you which direction the market is going to go, but you can learn how to make money in the market no matter what the market does. I don't know which way the market is going to go on a daily basis, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or even sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at southsideschooloffinancialfreedom.com. Here is the Southside trading watch list from the week ending July 23rd, 2022. The strongest performer on the list this week and for the second week in a row was Riot Blockchain Incorporated, ticker symbol RIOT, in the second column. It was down minus 6.56% on Friday, but was up 27.83% for the week. Riot Blockchain is focused on gaining exposure to the blockchain ecosystem through its cryptocurrency mining operations, internally developed businesses, joint ventures, and targeted investments in the sector. The company primarily focuses on Bitcoin and general blockchain technology. Looking at a summary of results, you can see that Riot has decreased minus 68.11% year to date. I did not trade or generate cash flow from Riot this week, but I have in the past. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do you do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside Portfolio Cash Flow System is outperforming the S&P 500 Index ETF SPY. The Southside Portfolio is down minus 8.19% versus minus 16.82% down for SPY, a difference of 8.63%. The Southside is beating SPY by almost 9%. The cash flow generated by the Southside cash flow system for this week was 5.89% of the portfolio account value. The account value changed by 6.73%. Meanwhile, the S&P 500 ETF SPY changed by 2.59%. Bitcoin Watch. Bitcoin gained more than 8% this past week, but continues to be in a bear market. It has lost just over 67% of its value from its all-time high achieved in November 2021. I sold option contracts on two positions this week. They were both calls that ranged from $100.04 to $101.36. You can get more details, including the total dollar amount of cash flow for the week, on the website southsideschoolofinancialfreedom.com. Check out past videos for other questions of the week to increase your financial IQ and your understanding of the stock market. The videos are organized in playlist levels 1, 2, and 3. Please like, share, and subscribe.